Apple's share price has performed relatively well in the last month as investors are excited about the new iPhone lineup, and early orders and early data indicates that new orders for the upcoming lineup are much better than expected. So investors are asking me, what do I think about Apple now? Do I think it's a buy or a sell? And what's my thoughts regarding the business at the current market price? So I'll share with you those details here and update you on my fair value calculation.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So given the recent increases in share price, Apple is now trading near its most expensive valuation in the previous year. It's now trading at a forward PE of 33, about where it started at in January of 2025. If you recall, coming into this year, I told investors that I didn't like the risk versus reward for Apple stock. I rated Apple stock a hold. I didn't like the prospects coming in, and the increase in risk as the company faces now are even higher than it was coming into 2025. The increase in trade barriers is especially troubling for Apple, given that it manufactures nearly all of its products outside the United States. Now, Apple CEO Tim Cook has done a phenomenal job working on getting exclusions and special treatment from the current administration regarding its ability to import products from outside the United States without having to pay these much higher tariffs that are in place for companies that are less important, let's say, or not as large in terms of scale, in total revenue, in the amount of people that own the stock, right? Apple stock is owned by so many individuals as an individual investment, but also as part of their index funds. Apple is a large position, being a multi-trillion-dollar company. So it's, really important for the US economy for Apple to perform relatively well. I think that's part of the equation why Apple has been able to garner special treatment from the current administration. But that might not last forever. So those risks are still apparent. The company is diversifying its manufacturing base outside of China, trying to go into India and expand its manufacturing in India. But then the administration increased tariffs on India also upwards of 50%. These tariff rates are changing so frequently and so largely that it's difficult for enterprises to manage all of the changes. So Apple's risks are increasing. Sure, the new iPhone lineup is looking strong. The higher average selling prices will do well to boost the company's revenue and profitability and bring an additional upgrade cycle. Remember, people bought a lot of electronics in 2020 and 2021. Phones were one of the things that people spent a lot of money on in those years when they were locked down at home. There were fewer places they could spend their money, so smartphones were something that people bought in large quantities. And now those smartphones are coming into their upgrade window where it's 3, 4, maybe 5 years old, some of these smartphones. And so they need to be upgraded. And Apple provided a compelling reason for those folks to upgrade those older smartphones. And that's what has investors excited. But I think this valuation is a little rich for Apple given the current risks the company faces. Similarly, when I look at my discounted cash flow valuation model for Apple, it looks overvalued, not by that much. And I'll say the same about the forward PE. It doesn't look ridiculously expensive. It's not like, Tesla where I feel it's, super expensive. It's just slightly more expensive than I would like to own or that I would like to purchase this business. And even on a fair value basis, I calculated a fair value at 213. Current market price is 256. So applying a margin of safety, I could only say it's only marginally expensive. So this is a classical hold situation where it's not so expensive, where if you own the stock, it's like, oh my gosh, I need to sell it. But it's also not such an attractive price where you want to go out and buy at these market prices. There are much more attractive large cap tech stocks to buy, including Meta Platforms, Microsoft, Alphabet, NVDA, all of which I like better than Apple at current market prices. So to update you, I think this stock is a hold right now.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.